G'day folks, welcome back to Pete's Investing. It's January 18, 2024. This is the US dollar technical analysis. So here we're going to be looking at some charts for the dollar, but also stay tuned into the end. We've got an economic outlook and also including a trading idea. So what we have here, especially for those new to the channel, we've got the weekly, daily and hourly, and we look at the overall trend on all of them. So the CCI 400 down here is showing us our trend, and here it's below its moving averages, and that's showing us a somewhat bearish movement. On the daily, it's broken up through those averages and showing us pretty much a neutral to possible bullish momentum. On the hourly, it's been moving upwards in the last few weeks, but now it's moving currently sideways. So again, a bit of a mixed story overall, so just be careful about going long or short. On the weekly as well, just looking at the CCI 150, our divergence indicator, that shows us no divergence at the moment. That's moving in line with the price. That's what it normally does. On the daily, you can see there was a small divergence between those peaks there on a CCI 150 versus higher highs on the price. It fell back and eventually broke through that target area. That target area is generally drawn as a Fibonacci retracement between the recent Fibonacci range. And in this case, I put it through between that low there to the 23-38% level. Now, Fibonacci's are a bit subjective in terms of where you draw them. I could have drawn it to that point there. You can see there it's actually broken through that 61%, and that's important. And it initially broke between the 23 and the 38%. Let me just blow that up. Initially broke between the 23 and the 38% if you had it taken to that Fibonacci range. Now you'll notice, if you took it to that Fibonacci range, that the key area to look out for is the 61% level. It typically bounces off Fibonacci's levels, generally, but if it breaks to the 61%, which is a key area, which it did there, it continues a downtrend, and that's what it did in that case. So just be mindful of that in terms of Fibonacci, one of the Fibonacci rules. So on the daily, again, we're moving somewhat bullish. It's broken up through the moving averages, but just be careful of going long. On the hourly, it shows a few more divergence to consider. You can see here we had a bullish divergence on the 150 versus lower lows on the price. Now it actually broke up. I drew the Fibonacci to that high there, and it actually broke up and hit and penetrated that Fibonacci range, that target area there. So if I draw that target area, that's around that area. So it penetrated that area. Always choose the closest Fibonacci range. Of course, it can go higher, which it has in this case, but that's the minimum Fibonacci retracement before it potentially turns down. Then we had another bearish divergence on the CCI versus higher highs on the price, broke down, hit our target, and we're currently sitting on another bearish divergence versus the price. You can see there it's just touched our target area and it's hit that area as well. The CCI 400 is broken below its moving averages and potentially going to go lower. There's no sign of a reversal yet on the CCI 150. And again, the CCI 150 generally moves in line with the price. So I do keep these rectangles in there for historical purposes where those divergences have been hit. I don't normally trade the divergence. I normally trade using the overall trend. The divergence I use primarily as a potential reversal or to get out of a trade with profits. So for example, if I was going short in this case and I saw this bullish divergence, I'd be exiting the short trade and getting out of the trade. Likewise, if I was going long here, I'd be exiting the trade if I was going long, if I saw this bearish divergence. Now, in terms of a trading idea, again, I look at depending on what time frame you're trading on. Now, again, I've had some queries saying that, why don't I show the 4-hour time frame? Of course, you can enter any time frame. It's the same principle. What I'm trying to teach you here is the principle, not so much spoon feeding you every time frame necessarily. So again, if you're trading the 1 hour, then I'd like to look at the daily in particular for a potential trend and trade in the direction of that trend. Remember, the trend is your friend. So in this case, if that is going long on the daily, primarily going long would have been useful to go long during that stretch in those hours. Now again, just be mindful of divergence. If you see that and you're going long, I'd be getting out of the trade and taking profits. So what I've done, one simple trading idea. Just before I go any further, if you're trading shares, and again this is trading the US dollar and indices you can apply to, but if you're trading the dollar shares, for example, blue chip shares, on the daily time frame, then I'd be looking at the weekly. That's why I'm showing you the weekly. So again, adjusting your time frame depending on what level you're trading to that level. If you're trading, for example, the 5 or even 15-minute time frame, I'd be looking at the 1 hour or even the 4 hour time frame here and showing me a general direction. So again, just in terms of a trading idea, again, just using it as an example, if this was going long during that period there, you'd apply that to this point here, especially if you see a bullish divergence here. On the hourly, one method would be to, and I've got here some buy-sell signals. So for example, the trading strategy would be when the CCI 150 breaks above the zero line, that black line is a zero line, and close it out when it breaks the plus 100 level. So again, you'd buy it there, close it out there. That would have been a nice little trade. Another couple of trades here, you would have entered a couple of times there, so you would have averaged down and then close it out at the top there. Here you would have averaged down probably 4 entries, and then close it out again with a nice little profit. Again, you can actually average down. I use the average down approach, or you can use a stop loss method. So pick and choose your strategy, that whatever works best for you. I'm not telling you to do it any particular way. I'm just giving you some ideas on how to trade it. Now in this case you would have gone long there potentially, but again at this point, again if I show you the cursor there on the left, you can see there we're breaking down into we're still in a bearish mode. So you potentially, well, you would not have taken those long trades here, because here we look at the moving average and it's still in a downtrend. Here, this little period, we're starting to break to the upside, and that's where you can start taking some long trades. So here you would have only taken short trades, and I'm using if I show you the short trades, for example, if I was going short there, some short sell indicators there, and you would have taken those profits there. And again, I wouldn't have been taking those short trades there because it's going against the trend. Anyway, just a couple of ideas for you to consider. Of course, there are many thousand types of entry and exit rules. This is just one simple one, so just bear that in mind and make sure it works with your trading strategy. In terms of some economic outlook for the US dollar, just be mindful of the safe haven demand for global economic uncertainties, including the wars. And the US dollar is generally a safe haven, although more recently it's, with all the printing of money, just be careful of having too much faith in the fiat currency. Rising US interest rates, the Federal Reserve's tightening monetary policies attracts investment, and with also the weakening euro and yen, that can also add strength to the US dollar. In terms of potential downside risks, easing of inflation shows sustained declines. The Fed could slow down rate hikes, including and reducing the dollar's attractiveness. Global economic recovery, strong global economic outlook could decrease safe haven demand for the dollar, and trade policies, unfavourable trade policies could impact the dollar's value in international trade. Just some data sources for further research if you have any such further interest. So that's the US dollar technical analysis, economic outlook, and divergence, which we've hit today. So if you got value out of the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in a future video.